All right, let's dive right into this masterclass on the Florida Zero Down Dream.
All of this for zero down.
If you've been thinking about buying a home in the Sunshine State, but, you just don't have tens of thousands of dollars saved up, you are in the exact right place.
All right, you have my attention.
In today's explainer, I'm going to show you exactly how to execute a zero down purchase without getting your mortgage flat out denied at the closing table. I'm walking you through the precise details so you leave with a complete, bulletproof blueprint. So, here's our syllabus for today. We'll cover the zero down dream, down payment mechanics, the golden exception stack, some advanced tactics and pitfalls you've got to avoid, the reality of closing costs, and finally, the ultimate Florida assistance master list. Let's get into it. The zero down dream. Let's start with the absolute fundamentals and look at the broad paths that actually make buying a home with zero down possible in Florida. Basically, you've got three main paths to pull this off. First, government-backed mortgages like VA and USDA loans, which inherently require zero down. Second, you can take a standard mortgage and pair it with down payment assistance, or DPA, programs that step in and cover that typical 3 to 5% for you. And third, you have specialized credit union portfolio loans that are designed specifically to get first-time buyers into homes with zero down. Section 2, Down Payment Mechanics Explained. Now, to figure out which of these paths is going to work best for you, we have to understand the underlying mechanics of how down payment assistance actually functions in the real world. And this right here is a distinction you absolutely must understand. Grants versus loans. Grants, that's free money. No strings attached, no repayment, and most importantly, they do not place a lien on your property. That makes them incredibly easy to stack. Assistance loans, on the other hand, whether you're repaying them monthly or they're deferred with zero monthly payments, or even if they're forgivable over time, all of those require a formal recorded lien on your property. So that brings us to understanding lien position. In the simplest terms, lien position is just the order in which lenders get paid back if a home is sold or, unfortunately, goes into foreclosure. Think of it like a line at the payout counter. Every single lender wants to be as close to the front of that line as possible. Let's look at how this plays out in real life. Say you put 3% down on a $100,000 home. Your primary lender lends you $97,000 and takes the first lien position. The assistance program covering your $3,000 takes the second lien. Well, if you try to add a third assistance program to the mix, they're forced into a third lien position. And this is exactly why lenders will usually give you a flat no to stacking a third program. If home values dip even slightly and you have to short sell, that third lien holder risks getting completely wiped out. The guidelines are just there to protect them. Section 3, the golden exception stack. Don't stress about that roadblock because I'm going to show you how to bypass it. There is actually a golden exception in Florida that lets you stack programs for maximum benefit. The trick is pairing a zero down USDA loan with the Florida Assist program. Under the Florida Housing Finance Corporation, Florida Assist gives you up to $10,000 as a 0% non-amortizing deferred second mortgage.
I find it so interesting when you talk about interest.
Let's run the exact math on a $100,000 home because it's brilliant. USDA already covers 100% of the purchase price. Plus, they roll in their 1% upfront fee, so your first lien is roughly $101,000. So where does that $10,000 from Florida Assist go? It pays your closing costs. Notice you legally owe $111,000 on a home worth $100,000? This works because USDA explicitly allows 100% financing, and Florida Assist safely sits in a second lien position at 0% interest with zero monthly payments. All right, let's build on that with a pro move. Say you negotiate a $5,000 seller concession to help with closing costs. Most people would think, awesome, I don't need the Florida Assist anymore. Wrong. Do not drop the Florida Assist. Keep that $10,000 to cover your closing costs and apply the $5,000 seller credit to buy down your primary loan balance or the purchase price. By shifting your debt away from a high-interest primary mortgage and onto a 0% deferred loan, you're lowering your monthly payment and saving yourself thousands over time. Section 4, Advanced Tactics and Pitfalls. Let's see how this builds into some higher-level tactics and also take a hard look at where the traps are hidden. Remember earlier when I said lenders hate three-way stacks because of that risky third lien? Well, you actually can stack three programs, but only if you follow the golden rule. That third program has to be a true grant. If you combine a zero-down USDA loan, a $10,000 Florida Assist second mortgage, and a local non-repayable grant, that grant requires zero lien position, and that is exactly how you execute a fully viable three-way stack. But listen up, Because here is a massive trap I see buyers fall into all the time. You absolutely 100% cannot stack state assistance programs on top of credit union portfolio loans. Let me explain why. Products like Mid-Florida Credit Union Select 100 are phenomenal. They give you 100% financing with no private mortgage insurance.
No down payment and no mortgage insurance?
But they are portfolio loans. That means the credit union holds the debt in-house and they make up their own custom rules. State programs like Florida Assist require you to pair their funds with a standard government or conventional mortgage like FHA, VA, or USDA. Structurally, they're just incompatible. You gotta pick one lane or the other.
Either one sounds fine to me.
Section 5. The reality of closing costs. It is time for a quick reality check on what happens before you even sniff the closing table.
Here is a fundamental truth of real estate. Zero down does not mean zero out of pocket. Even if your down payment is totally covered, you still have closing costs and escrow setups.
And how much are closing costs? Right there. Excuse me.
And before you even get there, you need cash ready for upfront, non-refundable expenses. I'm talking $400 to $600 for a home inspection and another $500 to $800 for an appraisal. You simply must have this cash in your bank account before you start making offers.
Everyone wants my money!
But hey, here is some incredibly good news to offset that. Right now, roughly 14% of all homes for sale in the entire United States are right here in Florida. That is wild. Inventory is high, and when inventory is high, it's a buyer's market. Sellers are super motivated, which means they are way more willing to pay those closing costs for you. If a program covers your down payment and a motivated seller covers your closing costs, you truly can buy a home with almost nothing out of pocket beyond those initial inspections.
Section 6, Florida Assistance Master List. Let's open up the playbook and run through a rapid-fire master list of the programs available to you right now. At the state and national level, your foundation is VA loans for military families and USDA loans for suburban and rural areas. For medical and legal pros, commercial banks have zero-down physician loans. We've also got standard national DPA programs offering 10 to 15-year repayable second mortgages. Now, at the state level, things get crazy powerful. The Florida Housing Finance Corporation offers up to $10,000 as a 0% deferred loan for anyone with a 640 credit score. And you can't forget Florida Hometown Heroes, giving full-time Florida workers up to 5% of their loan amount, maxing out at $35,000 as a 0% deferred loan. When we zoom into the specific counties, the benefits get massive. Hillsborough offers up to $25,000 due upon sale or refinance. Miami-Dade gives up to $35,000 with equity sharing. Orange, Pasco, and Broward counties offer huge loans up to $70,000 or $80,000 that are literally completely forgiven if you just stay in the home as your primary residence for 10 to 30 years. In Osceola County, they're offering up to an unbelievable $100,000 based on income limits. Now, I have to give you the flip side of all this. Municipal funding runs on strict fiscal cycles, which means the money does run out. Right now, programs in Palm Beach County are closed. Tampa, Orlando, and Jacksonville are paused and not taking new applications at the moment. St. Pete's SHIP funding is paused, but their CRA funds might still be open depending on your income bracket.
Because these programs shift so incredibly fast, opening and closing based entirely on local budgets, you absolutely must verify what's available before making an offer. You need a pro in your corner for this. To put this masterclass into action, head over to noobhomebuyer.com/agent to connect you with a local expert who knows exactly how to navigate this maze and execute these stacks for you.
So, we've covered the mechanics, we've gone over the strict rules of lien positions, and we've run the exact math to make a zero-down purchase a reality. Knowing all of this, and knowing that sellers are practically desperate to cover your closing costs in a market holding 14% of the entire nation's inventory, the only question left is, are you ready to build your zero-down blueprint? Thanks for joining me on this explainer, and I'll see you on the next one.
We're homeowners!